Joining me in studio today is Peter Hugg. Peter, how's it going?
I'm doing well, thank you, Alex.
So let's start off with the job numbers that came out yesterday. They underperformed, gold skyrocketed. What more can we expect from reports that are going to be coming out in the coming weeks?
Well, as far as the tapering move goes, again, not to rehash old stories, we've been in the camp here at Kitco that we don't anticipate the Fed doing any tapering until 2014, and I even suggest that it's possible they may increase the bond buying if any events occur near the end of the year that could put us again in crisis mode. But you have Yellen not coming in until January. First Fed meeting isn't until March, so I think we're probably going to see continued monetary easing on the part of the Fed, at least at their current $85 billion a month, probably through winter into early spring next year.
What can we look to be driving gold in the next, let's say, till year end?
Well, that's where I'm having a bit of concerns. I mean, we looked at gold yesterday holding the 1312 support. We suggested entering the market at that level, looking for a 1325 break, which occurred right after the figures in the morning, which pretty much put a nail in the coffin of any tapering talk. And now we're looking for a 1355 target. Gold stalled overnight, and we got up as high as 1345, then some profit taking took place. So the market is now, in my opinion, trading sort of in a wishy-washy type of manner. I think it needs to consolidate here, absolutely needs to hold 1325 to continue the upward momentum. But I think the focus in the very short term over the next 4 weeks or so is going to be related to the value of the US dollar relative to the euro and the movement in the equity markets. And I think as long as the equity markets can maintain balance and have some upward momentum, I think gold 1355 is probably my target between now and when the next crisis occurs at the end of the year.
Right. Speaking of that next crisis, is it too early to start worrying about debt ceiling talks again after the patchwork that was just put into place?
Well, it's never too early to worry. I mean, you know, the context of holding a core position in gold covers the worry element of the market. But you know, they're jawboning now that everything will be different at the end of the year, that they're going to come to some type of resolution, and I mean, you just have to base it on history, and past performance certainly doesn't indicate that these guys are going to get their act together. So I think we're going to come up again against some kind of an issue, probably not until January, but an issue that's going to put the world on edge, is going to make gold probably a safe haven play coming into the early next year.
Now, how about Europe? I mean, we haven't. It's kind of taken a back seat there with with the issues that they're facing out west. Excuse me. What can we expect from Europe? I know Greece has been asking for another bailout. You got Spain's in lots of trouble. What's going on out there?
Yeah, I mean, I think Europe is mending, not as quickly though I think as many people expect. The U.S. economy, even given this craziness that's occurring in Washington, is still steps ahead of the European economy. And so I am not in the camp of a major dollar drop occurring anytime soon. I think the dollar is going to stabilize, and there's going to be movement more into the dollar, especially if the equity market can maintain itself in the short term. I think the European issue is far from resolved, and that could rear its head again probably early next year as well.
All right, what kind of trading ranges can we expect for gold and silver?
Again, gold, you know, I think I'm not seeing any impulse momentum in this market, but I'm hoping the gold market can hold the 1325 support level. And there's a possibility if we can get 1325 held and some momentum comes into this market and we can breach the 1355 target, which was my target at 1312, we may see 1375, and again, this is based on no geopolitical events occurring, just on natural momentum. So that's a possibility on the upside. If 1325, if we lose it, I think gold drifts lower. I don't think it sells off in a dramatic fashion, but I think the 1285 level comes back into play, with certainly 1255 maintaining, I think, solid support at least through year end.
How about silver?
Silver's going to trade with gold. I'm trading silver sort of on a ratio basis to gold. Whenever silver gets to about 58 ounces to an ounce of gold, I tend to lighten up on the silver and be a bit more aggressive on the gold. When silver tends to weaken off, and it has over the last couple of weeks, tended to trade between 58 and 62. Once it gets over 60 to the 61 range, I tend to like silver over gold, so I'm trading it more on a ratio basis. The overall trend will move with gold, but in between those movements, I think you can trade the ratio and pick up some extra profit by trading gold short against long silver and vice versa.
Good stuff. Well, Peter, thanks for popping in today.
You're welcome. Nice to see you guys again.
And thank you for watching this edition of For Pete's Sake. If you have any comments or questions, please don't hesitate to send them to newsfeedback@kitco.com. Also, be sure to keep an eye out for Peter. He'll be at the Metals and Minerals Conference in San Francisco, November 25th and 26th. Have a good one.